Today, I have the pleasure to welcome in the studio Laurent Nittler, who is president of the Economist Club. Welcome.
Hi, Jerome. Thank you for being here.
It's really a pleasure to have you because, as you know, I'm really interested about economy. I am not an economist. I sometimes attend some presentations of your club, which I always find extremely insightful. But for those who do not know you, can you please present the Economist Club in a few words?
Yeah, with pleasure. So the Economist Club was actually created back in 1964, which was under the name of Association des Universitaires en Sciences Économiques and Commerciales, meaning just the economics students who have done studies at universities.
So an academic background.
Exactly. So it started in 1964, but in 1998 it was then changed into what is now known Economist Club Luxembourg. So we have a long history which comes with it. And still today we are quite happy to have this long-standing history behind.
Just one thing about this period, people sometimes don't know, this is also the period where the central bank was created, where CSSF was created. We went from something pretty centralized to a really structured financial industry.
Of course, the world has become more complex over time. At the beginning, the conference that we understood were about more having a debate about a recent topic, about economics, and it has been evolving now today to have one speaker talking about one specific topic and having then a Q&A session with 2 and 3 questions at the end. So what we have over the course of the year, we have one key event, which is also always the one that attracts the most people, is the report of the budget of the government. So this is of course something which is the key law that impacts everyone in Luxembourg, of course all the citizens, but also the corporations, and therefore we always have the report coming each year at the end of the year.
It's by the rapporteur.
Exactly, from the parliament, who is giving then, who's actually doing a tour with different associations, and we are quite happy that we are one of the last ones before going with the official report to the parliament. So they know at the Commission des Finances that they have to come to Economist Club, so we are quite happy. And what is also quite interesting is since 2015 we have an MOU signed with the University of Luxembourg, which we are quite proud of. So we are sponsoring the best master thesis in the Master of Quantitative Economics and Finance. So very technical, academic with the history which comes with it, so it's in line with what we want to do, where we sponsor then and give a financial compensation, because just giving a certification to a student is of course interesting, but giving a kind of financial incentive is also nice for students. And we are currently working on seeing on how we can intensify this relationship with the university and do something more over next year. So this is something we will hopefully be able to finalize and validate at the next AGM in June.
So a few numbers. How many members?
So we have a database of 250 people, of which we could say, like, during the events, 1/3 is regular people that are coming to events, 1/3 of people that are coming sometimes, let's say for the budget. We have certain people that are coming only for the budget each year, and then 1/3 of new people. So the idea is really to be able to have a content which attracts people, but also to have the network of the people that come and then can discuss with different people on different topics. And we have a kind of tradition, which you know, as we have been participating in a couple of events, is that at the beginning of the conference, everyone introduces themselves with the name, where they work and what they do, so you know in the room what kind of audience you have, and of course then afterwards you can utilize it and to network as well.
So do you have to be an economist to become a member?
So the articles of association tell us, of course, that for becoming a member, an individual member, you should have studies related to economics or similar, because you have also Master of Business Administration and so on. But we also have, over the past years, of course, opened up our memberships for corporations. So at the end of the day, we have a corporate member, which allows then, depending on the size, 3 or up to even 6 people that they can then attend the conference on behalf of the company and do not need then this academic background, but utilize the membership to be able to listen to nice content, and of course then also for the network.
And last question everybody's going to ask is, how much is it to become a member? Maybe individual member pay how much?
Yeah. So the membership for individual members is currently 75 euros per year. For corporations below 150 employees, it's 250 euros. And for corporations larger than that, it's 500 euros per year. So let's say a reasonable amount.
Very good. So the reason also why I invited you is I'd like to know, with all those economists working together, how do you analyze the current economic situation of Luxembourg?
So then we can go back to the history again. So in 2000 and 2002, there was a report published with former presidents like, for example, Fernand Grums, Luc Hensich, or even Serge Allegrezza, who have contributed to a report regarding the reform or potential reform about the pension system in Luxembourg. So that's now, let's say, 25 years ago, and when people would read it today, majority is still correct nowadays, because at the end it's a mathematical system. You need each year so many people that are contributing more in order to be able to pay out those pensions, which are, let's say, something that has been reformed now, but potentially not enough in certain views, and also in the Economist Club's view, the reform has not gone too far.
Yeah, I think it's important to remember that 25 years ago, the challenges, as you say, were the same. We were anticipating the end of the banking secrecy. We did not anticipate that the funds would grow so much from 2010 until today, first with a liquid fund and then illiquid. But I remember Robert Kiefer from the Senap, who was screaming every time he could that we needed to reform fast. He was absolutely right, but it was 15 years too early. And sadly, nothing has been done. And I can say, I'm not an economist, that I really believe the reform from this year is highly disappointing. It's a little bit of what was needed. This is for pensions. How do you analyze the rest, like the debt, the budget 2026, all the challenges?
Yeah, so there are many challenges, of course. But when we look at statistics, from 1995 to 2025, approximately the GDP growth was on an annualized base 3%, or let's say close to 3%. When we look now at 2023, 24, 25, we don't reach this level, and we are not expecting to reach this level over the next years, except of course something.
Let's put the right number. I think last year it's always recalculated, but maximum would be 1.
Exactly.
The year before it's close to 0, and the year before it's close to 0.
Exactly. So not that much, and is expected for 2026 to grow 1.6, 1.7%. But of course, over the past years, we have seen that those numbers have been revised downwards.
Yes.
You always prefer, as with a budget, to revise numbers upwards. But unfortunately, in the past, it has been downwards. But for geopolitical, so there has been explanations to that.
I confirm that every year they announce something which a year later is proven wrong.
And which goes, unfortunately, on the... Yes. Because it would be the upper side. If it goes up, then everybody would positively and wouldn't be so negative about it. So those are the key metrics. And so what we need is the growth. Because again, with the relation with the reform of the pension, but also social security and others, in Luxembourg, we need growth in order to sustain our actual business model that we have. And we were successful over the past 30 years.
Yes, of course.
But those 30 successful years, and even the years before, but let's put those 30 years. So in those years, we also had challenges, but we were overcoming them thanks to the fund industry and so on. But now the question is, what will be the next fund industry, or how will it evolve over next time? So there are different ways to achieve it. So it's about creation of new jobs, it's about startups, it's about having a good ecosystem. So we have a good basis, because Luxembourg is known internationally for having good ecosystem, meaning you can reach people quite easily, if it's from the regulator, if it's from the ministers, from the ministries, and so on. So that's there. We can, but we need to utilize it and actually put it into numbers. Because just putting up a meeting and talking about something is great, but it's very important that we are creating the jobs, which creates then tax revenues, which creates then additional revenues streams for the economy. And we have seen in the past, of course, there's still companies coming to Luxembourg, which is of course a very positive announcement, which we like, which we are super happy. But on the downside, we also see that banks and other institutions, corporates, are reducing staff. So you have on one hand maybe a company coming with 10 or 20 employees, which we are very happy and we welcome them, and we're proud that they are coming and having chosen Luxembourg over other destinations like Paris. We don't have the sea and so on. Of course, that's the typical argument that we always have. But on the flip side, we have 100 employees reduction here, 100 employees there. So the net increase, and I don't have numbers now, but I think the creation of new employment last year was around 1%. And of this 1%, 0.7% was coming from the public sector. So if we would look at the numbers, so 1% is already low, but if we look at really at the numbers, the actual real economy has a net increase of 0.3%, which is not enough and not sustainable in the long run.
Of course, and on this, of course, it triggers a lot of questions. The first one is that we really see a clash of narratives, and we see that we have a huge public service, a lot of entities doing their own self-glorifying events. So I always see comments on LinkedIn, people saying that Luxembourg is now very big in space. It is not. There is some initiative for the past 7 years, a lot of money invested. Yes, some startups have arrived here, but apart from SES, there is nothing significant yet. 80% of all corporate taxes, I got that from the rapporteur of the budget, still last year, originate in finance. Not in startups, not in space, not in Meluxina. Meluxina is another example. And my question for you is, as an economist, you work with numbers all the time. I spend my life on static.lu. This is how you operate. The issue that we have is that the whole country is run without any KPI. I mean, you cannot tell me how much was invested in Meluxina, how much did it generate. I know, because I was planning to use it, that when I had a project of 90,000 euro, I didn't ask for anything. They said, you just put 20, the rest comes in subsidies. Well, it would be good that we all know that Meluxina is heavily subsidized, so we can get the cost-benefit ratio. How could we get the country to adopt economist methods, which is always to say, this is a number I invested, this is a number I'm expecting, this is the reality of the number?
So I would say there are different ways to respond to this question. The first one is, of course, KPIs are quite important, because in the private sector, KPIs, it's all about KPIs. It's about how you measure things, because you have performance, let's say, objectives, and then you measure it against, again, with the statistics of GDP growth going above or below. It's, of course, the KPI is always a guidance. So not that people think always like, okay, it's a KPI, it has to be reached. There are explanations if it's not reached or over. It's a guideline. So this is something which is quite important. And we see that there are incentives to put more KPIs around, let's say, the ecosystem at the ministers and so on.
Very strong resistance.
But it's not, the problem with the KPIs is more the monitoring afterwards. Because, as you mentioned, so you can put a target somewhere, but you need to be able to measure it. And the question, of course, about measurements and statistical data is, of course, to understand what is behind.
Yes.
There's always this kind of nice phrasing of saying, like, don't trust the statistical data that you haven't done yourself, because you know the metrics which are behind. I don't want to now say something negative about it, but KPIs are quite important.
I can say it. Statistics can be manipulated, for sure.
Mm-hmm. It's about a different way on how to utilize them.
And you can put some bias into it.
Exactly. So that's about the statistical data. So the KPIs, I mean, for creation of jobs and so on, we know there should be some targets that we need from the mathematical approach for the business model of Luxembourg. But it's not really followed in that way, because the ecosystem is led by themselves a little bit. So when we create a few jobs, it's not going to say like, okay, we're now at 6 months, we have reached 50% of the target, because you could also always argue that either the KPI is too high, it's too low, and of course that's more, let's say, a political discussion on that.
I see things in a more radical way. I read every 2 weeks cgfp.lu, which is basically the Confederation of Unions of Public Services, and they are basically electing the government. The fight that they're having is against evaluations. It's not KPIs. Evaluation is the fact that every year you should see your boss and he should tell you if he's happy or not. They are fighting extremely hard to resist this very primitive, necessary process. And there's often confusion between evaluation and KPIs. They put it in the same bag. So my vision as an entrepreneur is that the whole public service is resisting any kind of accountability. And I'm not talking evaluation, I'm talking KPIs. And I believe that this is why we have such a gap between, as you know, the objective performance that you can demonstrate with numbers and the subjective performance. And as we know, Luxembourg champions self-glorifying events. We can, you and me, invent a new award, and you can call me the best agency of the universe, and I can call you the most fantastic leader. This is what we see every week on LinkedIn. I'm not going to give names. There was one last week again. And of course, it's objective, subjective. And that takes me to my last question, which is, I read in New York a very interesting article. I will try to source it in the comments, which is that economists, whatever their political color is, tend to lean after being an economist, to the center and sometimes to the right, just because the reality of numbers, when you go to the objective reality of performance, is something you cannot argue about. Well, what do you think about that?
So it's a very interesting article, and I must read it in full to get more information about it. But generally speaking, in the geopolitical situation, we tend, especially in Europe, let's take the comparison of US and Europe, which is
exactly
debated quite a lot. So in Europe, we always have more the discussion, and also a little bit in Luxembourg, but we're trying to shift, is where can we spend the money? It's always about the public money. Where can you spend it? Of course, we need to help in social security. Of course, we need to help in pension. We of course need to help in housing. Of course, I'm not saying no, but it's about the amount. How much can you do? But the narrative should be first, and that's as an economist or an entrepreneur and others, is about where do you get the money from first. And I think Minister Gilles Rode is doing a good job on it and trying to change the narrative on where the money comes from, because he is aware that the money comes from the financial sector.
It was before being able to. Luc Frieden in 2023 during the election. He says really make the money first and then finance our social model. And for this, I think this is how we got elected. And I think they're staying true. But
it's about the competitiveness. But so I understand that certain people will have a different interpretation on that, because they see how much they are paying into in a certain way, especially entrepreneurs, companies, corporations, and how much they're getting out of it in a certain way. And therefore they can tend with, let's say, political decisions, but that's, of course, everyone can do on their own conclusion. That's no problem. But we're seeing the shift, especially in Europe. People always want to get more, because it will be never enough in a certain way. So if you could give an X amount of housing, which again is important, especially in Luxembourg, you will always have more people saying it's not enough. But what will be enough? Because you also need to understand a budget is actually a constraint that you have 100 and you need to use 100 and split it for everyone. You cannot use 100 and put 99 to 1, but you also need to discuss with everyone. So people need to understand the overall balance and see what you can do, what is more necessary today, and then comes this reasoning of an economist is how much you invest on how much you're getting out, because just investing now with no output afterwards is a not acceptable investment in a certain way, because you need to be, for example, for housing, when you can do investments into housing, you can get more people into Luxembourg, you can do more, you get more attractivity, you get more people, you get more competitiveness, and then you get more tax revenues, hopefully, in the long run. But that's a normal calculation which should be behind.
I have another question popping up in my mind, which is about debt. We know that the debt of Luxembourg is under control, 27% of GDP, that's fine, compared to France, 119. Germany is reasonable, I think, at 69, but as we know, the West is too much on the debt. As an economist, how do you approach debt? What is enough to develop your economy, invest, and what is too much, making you weak, as we are right now? Because when we needed more weapons to finance or to support Ukraine, for example, we suddenly found out we don't have money, we need the support from the US.
So debt is, of course, good when you can utilize it and create something with it. So of course, when you do calculations, or we can ask anyone who is doing a business plan, when you have a debt that costs you 5%, you need, of course, an excess return of at least 6% to create value in a certain way for the ecosystem and so on. There's just a normal highline explanation behind. The problem that we see currently with all the discussion with the defense sector is that you can invest into, let's say, a munition or whatever, but in a certain way, of course, it creates a few jobs and so on behind, but you will buy the munition and you will most likely stock it as an inventory. It's not creating in itself.
Or you will use
limited.
Or you will use it,
but
it's not going to give an immediate return.
Exactly. So that's quite a difficult topic in an economic way, but as national security and so on, it's a topic. So it's something that needs to be analyzed and be taken into consideration. And I think on the European level, the common debt is becoming utilized more and more. So thanks, but due to COVID in a certain way, because they aligned, for the also for the Rebuild Europe and so on. So they have a lot of incentives where they put together a huge money pot where they can use it. And that's, of course, not always with the return on invest in itself, but for national security, which is of course a key topic.
Yeah, and if I wrap it up, what you're saying is it's basically the same as me as a CEO of a company. Take some debt if you have a really good investment with a controlled risk, and if it's too dangerous, think twice.
Well, then of course everyone needs to know how much risk they are willing to take from
Absolutely.
an entrepreneurial spirit. I mean, if you think it's super important and you are really believing into it, of course you are more willing to take more risk. Other people are willing to take less risk. So that's for everyone on themselves. Mm-hmm. But for governments, of course, debt is something. It's not their money; it's public money in a certain way, and it's the next generation who needs, in a certain way, to pay it back, and interest rates are going up. So they need to take into consideration more factors, and therefore that's something that's for Luxembourg at least on the lower level. But we're seeing in other countries, due to the debt burden that they have, interests are going up. They don't actually discuss on a public stage that they are not building a school because they need to pay the interest. Mm-hmm. It's not really explaining that interests are going up, so we're building less schools, which is actually the reason behind. So the school is not being built because they need to pay the interest because the government before took more debt, and therefore the school is not built. So that's unfortunately also a way.
And a last opportunity for me to check my narrative with a specialist. I post often on LinkedIn that my analysis, for what it's worth, is that Luxembourg is extremely exposed to the risk of high interest rates. Why? Because a huge bulk of our industry is investment funds, and as an investor, why do I need to invest in funds which are risky if I get 5% guaranteed on a fixed term deposit? That's one. And of course, we have the housing thing. It was a priority of the government last year. It was not fixed. The market is already under very heavy tension. Just put the interest rate above 5%, and my analysis is everything will collapse. A lot of building companies will go bankrupt. It's going to be a chaos. Do you share this analysis, or am I completely delusional?
I share it partially, but it's very important to understand in Luxembourg that we have a very high savings rate. So there's a lot of money sitting at bank accounts, deposits, and so on, which is again fine from a risk point of view. But it's also again a European problem compared to the US because money is not invested. Sure. Because you can utilize money and invest it again into defense bond. The defense bond of the government was now something that was interesting, let's say it like this, for certain people. But of course, when we look at economics data, it's not the most attractive investment. But for certain people, it's saying it's maybe better to say like, okay, why should I put my money on the deposit or at the bank account, but utilize it and do something for the country in a certain way. So that's something that needs to be done more. Could be done for housing and others as well. But people, especially in Luxembourg, need to have financial education in a certain way that they understand where they can invest the money. Unfortunately, we are not like France or Germany, where you can say, okay, just invest it into the largest index like the CAC 40 or DAX. We don't have that. So we need to find a certain other way to invest the money into Luxembourgish ecosystem, which was in the past the housing. So actually, Luxembourgers often invested actually just their money into housing because it was performing well, instead of ETFs, for example, what the Americans are doing basically. So it's not about shifting completely, but it's about finding a proper balance for everyone.
But are we exposed to a risk if interest rates go to 5%? How do you see Luxembourg reacting?
It's interest going up is always bad for the different economies, especially for a financial sector. For Luxembourg, it has a huge impact because we were benefiting from the low interest rate environment, where we had 3% growth as an average, which we meant before in the 2010s and so on, and we were quite well performing. So we see that the low interest environment is better for us than the higher risk interest rate environment. And of course, it will not go down to 0% anymore, but at least we know that we will be vulnerable to a certain way when it goes up again. And inflation data is picking up a certain way, so we know that the inflation data will potentially result in either a longer period where we are now, or even higher rates, because the higher rates, so the longer rates on 10 years, 20 years, 30 years have picked up.
Yes, and not everything is lost, because when this happens, retail banks normally make money, but the question is, how exposed are they to the real estate market? So super complex topic. Thank you very much for sharing with us your expertise, and I encourage everybody, especially people who studied economics, to join the Economist Club. Thank you very much.
Thank you very much.